Hi, and welcome to the Monday Market Update. Uh, so let's look at the factor returns, what they've done last week. Last week was a slightly down week in terms of the overall market. Momentum took the most of the beating, while the others were just more or less in line, down about 1.5%. So there was, actually the internals don't capture, or the end-to-end returns, point-to-point measures don't capture what happened on Thursday, I think, where the Dow, which was down about 200 or 300 points after the CPI print in the US came, and it finally ended up closing some 400, 500 points higher. So there was an intraday swing of about 600 to 700 points on the Dow. So that's something, which these numbers will mark. On a monthly basis, values leading, followed by small cap, followed by the overall market. Quality low, all at momentum negative, but just slightly, nothing much to write home about. Let's see, year to date, it's again small cap, which has taken most of the beating. Value surprisingly is now moved over to a negative 4.1. Momentum is down about 3. Markets are about flat. Quality is very flat. Alpha low, all again flat. So in all, it's a kind of a churning kind of a year where there are no big trends that are emerging, except in the small cap on the downside. Let's look at the trend in the factors. So values again gone into a downtrend. It was down the last week of September, then it went up last week now, and it's down again. So it's small cap consistently in a downtrend. Rest of the factors, market momentum, quality, low, all are in an uptrend. Let's look at the sector. So IT surprisingly has had a decent week where interest rate sensitive like realty, um, banks and finance are okay, but realty was down, lost the most. Energy lost another 3%, while pharma FMCG were down a tad bit. But other than that, let's look at the monthly numbers, which might give us sense for trend. So IT is not done so bad. The numbers from the majors have not been so bad. Today, Tata Elxsi reported its numbers, and they have not, the market reaction to Tata Elxsi is not been great. But overall, the large IT companies, the mega IT companies have done pretty okay. So FMCG, so you can see it was like a risk on kind of mode last week, where you see banks and IT do well, whereas FMCG was down about 2.8%. Year to date, FMCG is up, auto is up, bank is up, and IT is down the most. So that yearly trend continues, but for the month, it's been IT which is up. So seeing some divergence in action there. In terms of the sector performance, media has gone into a downtrend again. But other than that, nothing much has changed. Auto, bank, FMCG, pharma, metal, finance, energy is down, infra is down, realty is down. So basically, finance, metal, pharma, FMCG, bank, and auto are in an uptrend, and IT, media, energy, infra, and realty in the downtrend. So energy is giving up most of its gain. That trade is sort of reversing, is what we can see. Realty, the trade is reversed already. So because we saw some down weeks earlier in August and September. Pharma seems to be making a trend change in the up. So let's see if that trend holds or not. And so we have 6 sectors up, 5 sectors down. So it's a mixed bag out there. This is our factor allocation model, where Like we told you in the beginning of the month about values gone into a downtrend in the beginning of the month. So, that allocation has gone to gold. Uh, Momentum and quality are risk on, and 33% risk off. So 67%, which is comprises of momentum and quality, is risk on, and about a third is risk off. So with that, let's see, we are thick into the earnings season. So let's see, what the rest of the week brings for us, and we'll see you again next week. Until then, just the disclaimer that nothing in this video should be construed as investment advice, purely for educational purposes. Please consult your investment advisor before investing. And you can follow me on Twitter at Anish Daily, at QEDCap. Visit us at QEDCap.com to subscribe to our newsletters. We'll be releasing our investor letter most probably this week or early next week. So you'll get it in your email. And as always, do like, subscribe, and follow our YouTube channel. And please keep writing in with your comments and questions, and we'll answer all of them as possible. Thank you, and see you next week.